Ryan Cohen just put his money where his mouth is, and the shockwaves are hitting Wall Street right now. While the mainstream media spent all of last year telling you that GameStop was a dying mall rat, the CEO just dropped $21 million of his own personal cash to buy another 1 million shares. This isn't just a routine trade. This purchase just pushed his total ownership to a staggering 9.3% of the entire company. Today, we are breaking down exactly why this move is the ultimate signal for a massive 2026 shift. We're talking about an $8.8 billion war chest, a hidden warrant trap designed to crush short sellers, and the math behind what could be the biggest squeeze we have seen in years. Let's look at the raw data because the numbers don't lie. On January 20th and 21st, Cohen stepped into the open market and snatched up those million shares at an average price of $21.36. You have to understand how rare this is. Most corporate executives get paid in stock options and sell them as soon as they vest. They dump their shares on you, the retail investor. But Ryan Cohen takes zero salary, zero benefits, and zero cash bonuses. He only wins if the stock price goes up. When a billionaire puts $21 million of his own money into a stock at 21 bucks, he isn't looking for a 5% gain. He's telling you that he believes the current price is a massive steal. But here is where it gets interesting for the long-term holders. GameStop isn't even the same company it was 2 years ago. It has quietly evolved into a massive venture capital firm disguised as a video game retailer. With $8.8 billion in cash and cash equivalents, GameStop is sitting on a mountain of capital that most S&P 500 companies would kill for. Even if they never sold another video game, that cash sitting in Treasury bills is generating over $400 million a year in pure, low-risk interest income. That alone is enough to make the company permanently profitable. Toss in their strategic move to integrate Bitcoin into their treasury, and you have a high-tech fortress that is immune to the bankruptcy narrative the bears keep pushing. Now hold on, because there is a specific number that Wall Street is absolutely terrified of right now, and that number is $32. You might have noticed a shift in the air lately, and that's because of the invisible line being drawn by the latest warrant dividend. If you have been watching the ticker lately and wondering why the volume is picking up, you need to understand the mechanics of the GME-WS warrants before you even think about hitting the buy button on more shares. This is the part of the story the hedge funds really don't want you to grasp. Last year, GameStop issued a 10-to-1 warrant dividend to its loyal shareholders. This was a genius move by Cohen. For every 10 shares you held, you got one warrant with a strike price of $32. For the average investor, it's a nice bonus, but for short sellers, it is a nightmare. Short sellers have to replicate any dividend issued by the stock they are shorting. They can't just print these warrants out of thin air. This creates a massive secondary squeeze pressure that builds up as we approach that $32 mark. Even if you just bought 70 shares yesterday and missed the initial free handout, the existence of these warrants acts like a giant magnet pulling the price toward $32 by October 2026. We are also watching the math for a potential S&P 500 inclusion. To get into the big leagues, a company needs 4 consecutive quarters of GAAP profitability. GameStop is knocking on that door right now. Think about the scale of that move. When a stock joins the S&P 500, every major index fund like VOO and SPY is forced to buy millions of shares regardless of the price. If the float is already locked up by retail investors and Ryan Cohen owns nearly 10%, where are those shares going to come from? That is the recipe for the final squeeze. Ryan Cohen isn't gambling on a meme. He is building a financial fortress that is designed to outlast the shorts and reward the people who stayed through the volatility. If you want the truth on GameStop before the next major SEC filing drops, make sure you hit subscribe and join the 9.3% club today. What is your realistic price target for 2026? Drop a comment below and let me know if you are holding for $32 or if you think we are going much, much higher.